Hello, everyone. Thank you for joining us today. My name is Chiman, and I have a very handsome face, but just because of the mask here. Thank you for joining us, and very, very excited and happy to be here today. We have three very established people from different industry. First of all, I have far on my right, we have Jim, who is representing Topaz Family Office. And then we have Alessio, representing the CEO and co-founder of Hex Trust. And then we have we have Joseph Chang, also CEO and co-founder of LORA Technology. My name is Chiman. I am going to be the moderator for today. It's a very strange job for me because normally I sit on the panel and I'm the one who's basically answering a lot of questions. And I assume today I'm going to have a lot of fun asking a lot of these questions. And this is something that, on behalf of, Family Office Association, also Raffles Family Office, this is something that, a topic that is very, very interesting and is something that is constantly on our radar. And the main topic here today is the new type of digital asset and also wealth tech. And that is something that, I'm very excited to have Joseph and Alessio here to really explain a little bit more about, what they're really doing, what are the problem and pain point they're trying to solve for family offices. Maybe before we go on, I would like to pass the mic to each of these panelists to maybe do a brief introduction about themselves, and maybe I can pass to Joseph.
Sure.
Yeah, please.
Yeah, thank you, Chiman. So my name is Joseph Chang. I'm a co-founder at LORA Technologies. We are a robo-advisor for stocks, built for regular stock investors. The pain points we're trying to solve is, I think, nowadays for regular stock traders, there's too much information and perhaps too little advice. There's lots of social media, all sorts of stuff. So what we do is with our AI engines, we provide analysis, we provide scoring, we provide data, we provide recommendations to investors. And once you pick the stock, the other pain point is, what's your plan exactly? How are you going to invest it? When do you buy? When do you sell? So that's the other pain point we try and resolve with our AI trading bots to help you achieve your targets, but all while you're trading stocks. So I guess in summary, what we're trying to do is help regular stock traders with what to buy, and when to sell.
Okay, thank you. And Alessio?
Thank you so much. My name is Alessio Quaglini. I'm the co-founder of Hex Trust. We are a digital asset infrastructure company. And the problem that we're trying to solve is to provide solutions that help facilitate the access to digital asset investment for institutional investors that want to add digital assets to their investment portfolios.
Thank you. And Jim?
Hello, everybody. My name is Jim Kwok, and I'm the CEO and co-founder of Topaz Family Office. And then some 10 years ago, we first established ourselves as a single-family office, and then we evolved into a multi-family office. Talking about this decade, the financial market has changed quite a lot. Just like Joseph has mentioned, information flow is overwhelming. Then we have to tackle many things, and then many investment product spectrum is changing. And then now today we are talking about wealth tech. Many kinds of tech comes up, and then our job is to provide holistic solution to our family office clients. So today I feel very happy to be able to discuss with some of our leading provider in town, and then as well as the moderator to discuss about this topic. Thank you.
Thank you, Jim. So for people who are watching us, I think let me do a 10-second version of them. So Joseph here owns a technology firm that deal with old school investment products, right, which is equity. And Alessio here is technology firm that custodize a new set of digital assets. And Jim is family office that run family funds for multifamily office, one of the leading multifamily offices in Hong Kong. So right now, the question is, family office is a big thing. It is a very hot button, keyword, I think, recently on many of the radar on the government. So I think a lot of people realize, as the families in Asia and especially Greater China, is growing so tremendously. Just yesterday we were saying, in Greater China, every 2.5 days, 3 days, we are printing a new billionaire. Right, so we set up this, this very small unit of, specialized team to manage family wealth, and in the next 10 years, about next decade, we are expecting about $17 trillion of US dollars being passed on to the next generations. And so one of the very staggering statistics that we always mention that, the average age of, the Asian billionaire, they are about 10 years younger than, the European billionaire and the American US billionaire. And the average age of, billionaire from Greater China is another 10 years younger than the average Asian age, which means that the average, mainland Chinese or Greater China Chinese, they're about 20 years younger than the average billionaire from other parts of the world. And Jim, can you give us some insights about, so what are they like, so when you deal with them, what are the issues that you face, and what are the possible, opportunity that you see in the near future?
Yeah. Chiman, very good. You just have pointed out one of the key highlights about the changing in terms of the age, in terms of the perspective of the Asian family. What we are doing, serving in the Great China as well as Asian family, our experience is that their appetites towards some new advance, especially the technological advancement, is more welcoming and respectful. So that's why our firm has been trying our best to help to our families to do the asset allocation through this kind of technology. Talking about private equity investment, talking about directly search different kinds of algorithm trading, different algorithm trading team, as well as a crypto asset as well. So all these kind of asset class seldomly or rarely has been seen from 10 years ago. So this is a great change in this moment.
Sure, thank you. So what you're saying is, they are looking to invest into companies that are dealing with, digital assets, cryptocurrency being one of them, and also they are looking to buy, all this new digital currency, for example, crypto, Bitcoin, and maybe even NFT, right? So, Alessio, I'm going to pass the mic to you. So what do you think about this?
Well, I think it's not a matter of if and when. I think we've been through this kind of decision-making process over the past couple of years. Right now, I hardly know any institutional investor that has not yet made up their mind to actually enter the market and make some investment decisions, either indirectly by investing in the equity of companies that directly operate in the digital asset space, or directly in digital assets. So I think what we should really focus on now is what is going to happen next. So what are the assets that will come to the market that will be investable for these investors, and how can these investors actually utilize what's available in the market, the platforms available in the market, to extract as much value as possible from the investment opportunities that are presented to them. And the other thing that is very important is that when we look at digital assets, we look at, on one side of the spectrum, at a different type of asset that we compare to what we were investing in before. But at the same time, we're also looking at a different technology that has another type of complexities until now, compared to the typical investment methodologies that we're used to using in the traditional world. So I think these two aspects come together in a risk assessment, in a kind of a return on investment profile that institutional investors have to take into consideration.
Sure. Then, actually before the panel, we were just having a discussion. We kind of get, ahead of ourselves. So one of the questions I actually asked Alessio is that, from my layman's understanding is, digital currency. So let's say I have one Bitcoin, right? And I have 30, this 30 digits of, codes, right? So how I withdraw them? So basically I can deposit at Hex Trust, right? I can deposit that one coin with you. So I give away the 30 digital, number to you, and when it's deposited at and when you take custody of this one Bitcoin, you basically convert this Bitcoin into another new set of 30 sets of codes that only you know, and in many cases you mentioned that you don't even know about it, but you can utilize the Bitcoin, right? And can you tell us a little bit more, because you mentioned about lending and maybe even leveraging. How does it work? So let's say I have one Bitcoin and it's been deposited into Hex Trust. So am I expecting to get some kind of yield from it? Or am I expecting, I have some kind of investment product or strategy on your platform?
Yeah. So first of all, there are different types of cryptocurrencies, and the market has been evolving very quickly, right? So it has become actually very complex, even for somebody that operates in this industry, to actually keep up with the development. Now, let's start from Bitcoin. You have one Bitcoin. Obviously, the typical investment strategy was to buy and hold in the long term, basically betting on the appreciation in price. Then the next layer of what happened is that you can basically take this Bitcoin and lend it to somebody else, so that somebody else can put in place strategies for their own investment opportunities and strategies, which means that you can actually monetize the Bitcoin that you're holding in custody with a custodian, and you can obtain a lending yield for lending this Bitcoin to somebody else. The custodian in the middle is only facilitating this transfer of the Bitcoin from the lender to the borrower, and the lender obtains a yield. Then the next step is, okay, but I have this Bitcoin in custody with you. Can I borrow against it? So then all the borrowing platforms were born in the market that allow you to actually pledge your Bitcoin and use it as collateral to actually borrow another stable coin or another cryptocurrency to then either leverage up your investment or utilize the stable coin to make for your operating capital. And this was in the cryptocurrency 1.0. Now we are in a different market where actually digital assets have become more programmable, so you can do more things with them. So you cannot just lend them, borrow them, pledge them like in the same way that we would do with the traditional assets, but you can also put them at use in the blockchain itself, using them as a staking them to the blockchain itself to obtain a yield from the blockchain itself, or using them for some kind of delegation or governance processes that will provide in turn a yield or some kind of other airdrops to you. So the possibilities are becoming quite numerous, and I think the need for sophisticated and enterprise-grade platforms is even more right now, because they are supposed to be the gateway to accessing all these opportunities that are given to investors by digital assets.
Yeah. So earlier you mentioned that probably Hex Trust is going to come up with strategy and mandates for in future.
We have been working on and considering launching some strategies and some kind of asset management function within Hex Trust.
Yes. Okay. And you mentioned that the lending rate. I'm just curious, right? I mean, for our viewers as well. So, what is the expected return? So, if I deposit my one Bitcoin with you and you lend it to somebody, so what am I expecting to get in return for lending you one and only Bitcoin?
Well, okay. Actually, the market is really an oversupply of Bitcoin. So, by lending Bitcoin, you're not going to be able to extract a lot of yield. If you have Bitcoin, what you can do is to use it to borrow stable coin or US dollar, and then put in place some investment strategies for US dollar. So for example, with a 50% LTV, you will be able to extract a 6 to 8% yield from your Bitcoins. Right. Okay. But the risk profile is a little bit different.
Right. Oh, thank you. Yeah, that's very interesting, because this 6 to 8%, if you give 6 to 8% stable return nowadays, in a very stable form, you are a rock star in the room, no matter what.
Yeah, exactly. And to the eye of our buy side, we also love it. But in fact, talking about that kind of cryptocurrency, we also consider about, while we try to invest or we bring along our families to invest, we also consider about the volatility part. So that's why here comes to my another curious I want to ask Joseph, if you don't mind, that I understand your company is doing heavily on the algorithm trading, like AI, in terms of stocks. I would like to know more about how do you accomplish that?
Yeah, thank you. Bitcoin always steals the show in any discussion. But I guess back to the big asset class that I think we're all dealing with in family office still is equities, right? Along with bonds.
But you say big, right? I mean, I don't know. The last time I checked the statistics, the cryptocurrency digital asset, actually the market cap is not small anymore.
Around 2.5 trillion
that's US. Right. That's right. That's the size of Apple.
Yeah. Still
one stock. Yeah. Or Amazon, right? I don't know where the stock prices are today. But yeah, thanks for the question. I guess coming back to what LORA does, which is a little bit different. Again, we're a robo-advisor for stocks. And I think most robo-advisors out there in the market focus on portfolios. So balanced portfolios, lots of times built with ETFs to fit different profiles. So what we try and do is address the underserved market, which is really when it comes to stocks. And today, as you mentioned, investors are younger, they expect more, they're borderless, they have lots of choices, they're not just looking at their own stock market. And so there's plenty of information, plenty of choice. And I think depending on the sophistication of the family office, there's always need for tools that technology can provide to give you scale. So one of the things we do is, for example, we cover 7 markets, 3,000 stocks, using our AI engines to analyze, to score. And so that might be useful because at least you have something of a benchmark that you can use. Now, we're not going to give you a 50-page research analyst report that banks would do. But the data, the number crunching, the approach to the analysis is very much a replication of what happens in banks. And then the actual managing of a stock, particularly if you're managing a stock in another time zone and you're sleeping, right? You've got Apple or Tesla and you're managing it. Now you could either just decide to hold that stock long term and don't look at it, or you may need to execute, resize your position, and you need somebody to do that. Now, do you have somebody you can give that order to and do it for you? Do you have the scale? All of these things we can help with technology. So I'll give you an example. We worked recently with a local family office. It is a smallish family office, but they look at equities from a fundamental point of view. They want to they want to run their own portfolio of stocks rather than just follow a passive portfolio that's provided by somebody else. So for them, these are the pain points: how to follow many stocks at the same time so they can do their filtering, and when they trade it, they want some sort of an algo that can help them, and that's what our bots do. So you can set, investment horizons of up to a year, targeting a certain return, and the bot will help you manage the risk as the market goes up and down while you pursue that target. And if you're wrong, then the bot will help you minimize the losses. I mean, you'll probably still lose money, but it's like having your own trader watching it and reacting to what's going on in the market.
Yeah. I think the biggest differentiator, Joseph, ever since we started talking and preparing for this panel, is that it's very interesting because generally the family office setup is a lot of family offices, they tend to hire experienced portfolio managers, equity portfolio managers, right? So these guys, they know what they're doing. They're in the market, so they will go through their all their different requirements, mandates, things like that. So they will shortlist a set of certain number of stocks, and then they give you some parameters. But in that case, isn't it kind of similar to pre-orders, instructions? So basically, if let's say a stock is trading $100, I can put a few, instructions and say if it gets to 75, 95, I'll buy extra this amount, and if it gets to 105, I'll sell a certain amount. So it's almost as similar as to pre-orders, but so which means that I think the head start is definitely the more parameters and conditions. So can you brief us, walk us through some of the parameters that we have in place, and how do you communicate with AI? So I mean, if possibly I can just tell you, yes, trade Apple, I want 100% return. So how would your bot, react differently if somebody else and say, yes, I want to trade Apple, but I expect 10% difference. So how is the bot going to react differently from these two expectations?
Yeah, I mean, it depends on how you want to use it. So we also personalize these recommendations or these bots to the risk profile. So it's similar to what you're saying. If you want higher return, then you must be able to accept higher risk. And so once that is determined, what the bot does, it has a certain target that you've defined, and a certain amount of, and so this risk return is not, it's matching, right? There's no free lunch in this world. So risk return has to be, it's not like you can say, oh, I want 100% return, but I don't want to lose any money. Then this is very difficult for the bot to do. So there's always some kind of relationship, but you get to choose how much risk you want to take and how much return you're looking for. So maybe give you some examples. Today we have three family of bots, but two are interesting and actually generally matches what is mostly asked for out there. One is to essentially follow a stock that will rise in the future.
Basically
and so
buy and hold.
So, but what if it drops? So if you start with $100, like let's say if you want to put $100 in a stock, do you spend 50 day one to buy it? Do you put all 100 or do you put 20? You put 20 and the next day the stock goes up. What do? I should have put in more. Or you put in 100, the next day it goes down, I should have put less. So what we're trying to do with our bot is find the right level to go in and react to the market and react to things as we're trying to get at that. Now, if we're wrong and never even goes there and the market goes down because of some other reason, then that risk is controlled, is contained. You're not going to lose as much as if you put in the whole amount and just sat there, right? Now, you might wonder, what's the model behind this? It all comes from equity derivatives, actually. So my background, my co-founder's background, is we've been working in large banks for the last 20 years, all in equity derivatives here in Hong Kong. Yeah. And we've seen the growth of wealth management products, from very simple warrants that are listed, to accumulators, to all sorts of structured products. The models behind that is some very well-known equity derivative models that the banks have used for decades. What we've done is we've taken those and essentially applied it at a much smaller scale, so the client or the user can customize what they want to, what underlying stock they want to trade, or what stock they want to invest in, and what their risk profile that they're happy with, and it's something like that.
Yeah. Okay. Thank you. And so it almost sounds like, you know, as long as there's a secondary market liquidity, the application can be applied. So, sure. Alessio, next question: is there a way to marry these two together, like, you know, the wealth tech and the digital tech? I think it'd be interesting because they've got the technology, they've got the strategy, they've got the AI robo traders that can do the job. You know, you basically provide the, you know, custodian platform. So what do you think?
Well, I think it's there are a lot of very smart companies that are working in this area, and I mean, obviously, this is on the back of a huge demand, especially in the last 12 months, from institutional investors, family offices, etc. So what we have in front, of us, is a slightly different asset class. So you have some kind of an asset class that does not have enough probably data that you can work on to kind of calibrate your algorithms sometimes. And the reason why I'm saying this is not that 12 years of Bitcoin is probably not enough, but what I've experienced in this market over the past 5 years is that it's actually what this market is today is very different from what it was 5 years ago. So structurally, it's different. So the forces that move the market are very different from what they were before. So when we look at graphs, when we look at the way volumes move, etc., we will see that if the market was mainly retail-based some years ago, now it's moving towards more institutional. There are more and more trading companies that are closing arbitrages. There's a very well-developed derivatives market, right? So it's a very different market, which means that we cannot base basically our algorithms on data that dates back to a long period of time. But I mean, there are many trading firms that are doing very well, and there are many wealth management companies that are building investment products that are more investable for institutional investors to get into the space. Yeah, sure. And I mean, I'm very interested to know what you think about the historical data that are available on blockchain, considering that maybe Bitcoin you have 12 years, but for some of the blockchains you don't even have 2 years of data, right?
Yeah, no, it's a good question, Alessio. I mean, from an equity point of view, we have lots of data, right? We have fundamental data, we have technical data. Now, obviously, you can get all sorts of sentiment indicators from many sources. And in fact, those are the things that we use to analyze our stocks, choose bots, and so on and so forth. You're right. I think in crypto, it's mostly technical data, right? It's technical data as in how active is the blockchain, what's the hash rate.
You're saying it's not a fundamental investment?
I think we all know it's hard to value it from a fundamental point of view. But I think the idea is the same, right? It's just a new asset class, and the methodology is a bit different. But I think what we all have in common is using technology to address an investment process and the different needs along that process. Yeah.
So Jim,
much have been just shared by Alessio as well as Joseph in terms of the technology side, and then as a buy side or multifamily office, we serve a group of single family offices. We cluster together, and then we being the gatekeeper of them, we try to shortlist all kinds of asset allocation method or as a class. So what make us more interesting about it, except the return, is that we want to know more about how do you execute, like your execution plan, the continuity of your platform, as well as some risk management issue that you can tackle alongside if there's anything goes wrong, typically like the crypto area. Because as far as we understand that some 5-10 years, all kinds of financial crisis happening, and then flash crash, all these kind of terms, we have not forgotten that yet. So that's why as family office, we also concern much about the continuity, because quite a bit different from some 10 years ago. We want to have our wish list as preserved capital. Now we want growth, but at the same time with control as well as hedge the risk. So I would like to know more about from you guys.
Thank you. Yeah, I think that's actually the very next topic that we're going to talk about. That is the regulatory in your line of work. So, as we mentioned earlier, Joseph, when family office have a portfolio managers, this guy generally have 10, 20, 30 years of experience trading in stocks, equities in certain markets, and this guy is definitely licensed with one of the regulators, right? So. Can you walk us through how does it work? So, because robo-advisors, are they required to be licensed? And if not, if yes, then what is the future hold? And what is the action or protocol that you have in place to adhere to this regulatory environment? And please brief us about the regulation aspect of this thing.
Yeah, I think all of us have been in the markets for a while. We all understand licensing and the importance of regulation. And there's no different with robo-advisors. Advisors, that means you need an advisory license, type 4 at the very least. So all robo-advisors out there in the market today have licenses, as far as I know, and maybe different licenses. And I think this is where the job of the regulator becomes difficult, because what we do does not fit very clearly into any aspect, right? Yes. So just even how I described LORA, there's an advisory portion, which sounds like advice, and then there's the execution portion. But the execution portion depends on you're not actually managing a fund necessarily. You're executing into somebody's account. So exactly what license is that? So these are all things that are difficult. And I'm at least in Hong Kong. I've been licensed for the last 20 years, and I'm really happy to see that there's a fintech division that is looking at what we're doing and understanding what we're trying to do and figuring out what's the right way to regulate fintechs and robo-advisors in particular. But this is an ongoing process. At least there's a lot of focus on it, because I think we're getting a lot of support as a fintech in Hong Kong. Yeah.
So from a family office perspective, so basically you are outsourcing part of your equity portfolio to, let's say, Joseph, because let's say you are trading at 10 different stocks, and let's say 1 or 2 stocks you want to pass it on Joseph. So what are the requirements that as a family office that you consider before you hand over the money?
Yeah, this is a great question from Chiman. That regarding the risk management part, as far as we are concerned about the artificial intelligence, there's some kind of backlogs. Running or operation of this is hard to discern. So that's why when you execute such a risk management plan, it's sometimes somewhat hard to explain to our family as well as to the authority. So on this part, we want to address more about the concern. Otherwise, for some usual practice like rule-based algorithm trading, we get familiar with that because some statistical issue. But for the AI part, I understand this is a great trend, and then something like the natural process language research all these kind of things, study the news analysis, all these kind of overwhelming news happening in the market. Does happen or does affect the market, but we want to know more about how do you execute that risk management.
Yeah, it's probably, we probably don't have enough time to go through all of that, and I'd love to talk to you more afterwards. But I would just say that, first of all, when we say AI, there's a lot of misconceptions in the market, right? It could be, the misconception could be as much as AI is just like a really expert and is going to do everything for you and react to every circumstance and so on. And that is the wrong conception. Frankly, AI is just another technology that helps you analyze data at scale and do things that a human being can't do in terms of the repetitive nature and following a certain model. So there are obviously pros and cons to this, right? The pro is that you can, once you understand what it's doing, you can rely on it, that it'll do it again and again and again and not feel tired or bored or whatever. But then also the negative to this is that it can only do what you've told it to do and not what it's built to do. So the process would be something where we would sit down and tell you exactly where are we using AI, where are we using less AI or no AI, and show you what that algorithm looks like. It's no different than the first time you may have listened to a quant strategy explain how they come about and do their trading. It's no different than that, in my opinion. Yeah, and I think the other thing to highlight is that at LORA we are practitioners because we have been in the market so long, and all we're trying to do is replicate what we used to do with people. Obviously, you can't replicate the whole thing, but there's a lot of it you can do. Yeah.
Thank you. And Alessio, so what's your take on the regulatory environment for new digital assets, cryptocurrency? What's your view on that? Because you obviously, you got to satisfy the regulators. I think there's one thing going forward, but also you got to be able to convince Jim here to put money in you. And regulatory is definitely one of the keywords that he's going to bring to the table. So how are you going to address this?
Yeah, sure. Well, I mean, that's probably the question, right? I mean, obviously there are other things to consider, the operational risk, the security, compliance, etc. But obviously the regulatory risk is something very important and it's on everybody's mind. Now, I think we need to first look at it from a horizontal perspective, that you have different types of activities. So it's no different from the traditional world, right? So you have the asset management, you have the custody, you have the brokerage, you have the advisory, right? So we have to go and look at the different regulatory frameworks that exist and which of these activities is properly regulated in certain jurisdictions. Then you have different asset classes that pertain to the same kind of, they usually are put together into the category of digital assets, but are they really the same thing? When we compare a stable coin to an NFT or a Bitcoin or even a security token or something in a yield product in the DeFi world, are they actually the same thing, or are they, one is a security, another one is money, another one is a utility, etc., etc. So how regulators look at this? Now we have, what we've seen in the past couple of years is regulators going at different speed and with different type of approaches, right? So, some of them have been very aggressive in using digital assets as a way to obviously putting together a very advanced regulatory framework to attract new capital, new companies, new investments into the country, and to develop internally the business. Other regulators have been a little bit more skeptical, and other regulators have been kind of waiting for the bigger regulators to operate. Here in Asia, we're a continent of, I don't know how many countries, probably 35, 40, right? So we've seen it all. Right? And I think it's important that for companies, for example, like us that operate in certain verticals, we pick and choose the countries where we can operate our business in a regulated and compliant way.
So, Alessio, which are the so-called favorite countries, or which are favorite market or regulators?
Okay, so obviously it's in every newspaper, right? That Singapore has been really fast in adopting a regulatory framework. They've been very smart in kind of segregating kind of digital assets, the non-securities kind of digital assets from security tokens. And they've been very aggressive in actually filtering companies, right, and making sure that the ones that are able to prove to the regulator that they are up to the standard, that they can get a license. So, for example, we obtained some months ago a license from the MAS for custody, right? In the case of, but Singapore is not the only country, right? Obviously, the regulatory frameworks in Japan, right? There is regulatory framework there are regulatory frameworks in different countries in the Middle East that are very attractive, right? And if the next question is about Hong Kong, right? There is also something in Hong Kong, right? Is not complete, but there is something. For example, asset management companies, Type 9, right? There is a framework for Type 9 that want to invest a certain percentage of their funds into digital assets or setting up digital asset-based funds.
Yeah, definitely, yeah. So do you have something to add?
Yeah. On one hand, we're talking about the regulatory framework, and then on the other hand, as a SPY side, when we try to invest on these kind of new products, actually not new at all, at around 10 years, we will also concern much about the risk of cybersecurity on this kind of potential risks that we're going to be threatened. How do your company would tackle as a platform or service provider?
So, I mean, I think that's exactly why we entered the market 4 years ago, right? Because 4 years ago, there was really scarcity of enterprise-grade platform they wanted to bring to the market, something similar to what we have to comply with in the traditional regulated financial markets, but to the digital asset world. So that's where we saw the niche of actually bringing this kind of requirements that we would expect institutional investors to have and bringing them to the digital asset space. Now, as of at the end of 2021, what I can tell you is in terms of operational risk and security risk, there's been a lot of progress, right? So there are standards in the market that are applied also to digital assets, SOC 1, SOC 2, ISA 34.2, ISO 27. So all these standards are already available in the digital asset space, and I would look for companies that have put effort in complying with these standards and obtaining the right certifications, as well as penetration tests done by cybersecurity companies that can certify that your system has passed some kind of important, that has been designed and is solid and resistant to attacks.
Okay, thank you, Alessio. I think in the interest of time, we're almost at the end of it. It's amazingly, with a panel of experts, how quickly time passed by. I just want to finish up with the last question. One quick question, 30 seconds from you guys. Should family office, invest in wealth tech and the new, digital assets? I'm very sure, I know your answers, but I think the real question will be why. And Joseph, 30 seconds, or to you?
You mean wealth tech as in the
wealth tech
companies
and new
building the technology?
Correct.
Yeah. No, well, obviously my answer would be yes, but I think really it comes down to acquiring tools for the family office to serve its clients better, right? So if you stick to the old ways of doing things, then you're going to miss out on what the new technology can help you with. So you must be in the game.
Thank you. Alessio?
I think what blockchain brought to the market is basically a complete revolution of how we do things in the financial markets, but not only there, in the art market, in the digital ownership market. So companies that operate in this market, they will be really the drivers for this revolution. And in the next few years, I'm really convinced that we will not do things in the same way that we've been doing them in the past. Yeah. We will not see SWIFT, we will not see CSDs, we'll see blockchain companies
really
basically taking over the whole market.
Okay, last question, Jim. Do you buy that?
Definitely yes. And our standpoint is family office used to be as a substantial financial resources provider to nurture these kind of projects. So on one hand, we want to invest in digital asset. On the other hand, we also love to see more talents also in town to develop this kind of asset platform, strategy, all these kind of things, and then so as to benefit the family office in terms of the asset allocation.
Thank you, and I believe I will learn a great deal from the auto experts here. Thank you very much again.
Thank you.
Thank you.
Thank you so much.